channel.
Yeah, welcome back. We hope you guys are doing really well today. I know we are, right, babe?
Yes, we are. Today we are going to be giving you guys some more financial literacy. You guys know the drill. If you are not subscribed, make sure you click that subscribe button wherever it may be on the screen.
Yeah.
Comment, like,
Share all of that, okay?
Yes.
Stay tuned. All right, so today Kenzie and I are going to be properly educating you guys on how life insurance works, okay? So there's two main types of life insurance. You have what's called term insurance on one side, and then on the other side, you have what's called permanent insurance, okay? So Kenzie's going to be discussing to you guys a little bit about how term insurance works, and then a little bit later on in the video, I'll be going into about how permanent insurance works, okay? You want to let them know how it works, babe?
Yes, alrighty, you guys. So it's really important to know how to properly purchase life insurance. So that's what we're going to be talking about and just educating you guys on that. So with term insurance, think of it as if it's car insurance, right? So you're covered if something were to happen during that time, and if nothing were to happen, you know, it terms out. So here, for example, we have a 10-year, a 20-year, and a 30-year, okay? So let's just say, hypothetically, you're 20 years old and you qualify for the 10-year term policy. And by the time you're 30, it's gonna term out. So then at that time, you would have to qualify for a different coverage, right? So let's say here, the policy that you purchased includes living benefits. So let's say you were recently diagnosed with breast cancer. That policy death benefit is going to pay out up to 80 to 90% to help with the cost, okay? Or if you cannot complete 2 out of 6 daily living activities, it will help pay for that as well. So let's say you were in a bad car accident and it affected your daily life, or you couldn't drive, or you couldn't bathe or put your own clothes on, right? So it's going to pay out up to 80 to 90% of that policy. So here, I wanted to put up a different example. If you're 24 years old, you qualified and you were in good health and you qualified for a 30-year term, by the time you're 54, it's gonna term out. And so typically with that, you're looking at, with the living benefits included, $40 to $50 a month. And that death benefit is going to be anywhere around $500K. So if something were to happen during that time, that 30-year span, your family would get that money to help with the expenses.
Yeah, and so that was definitely a really good explanation there on how term insurance works. Now, just to elaborate a little bit on like the pricing there, it can vary from $40 to $50 just depending on how healthy you are. Mm-hmm. So like let's say if you're a little overweight, or like you're
smoke,
things of that nature, that price can start to increase a little bit. Mm-hmm. But just depending on your health, that price can be
go
up or down.
Yeah,
so
and that's why it's really important to be thinking about these things when you're younger, because typically when you're younger, you're healthier. So you want to be locked in at that cheaper price, right? I think everybody wants to be locked in at a cheaper price. So it's definitely very important to start to think about these things when you're younger.
For sure. That's definitely true, babe. So going on to the other side of the spectrum, you have what's called permanent insurance, okay? So with permanent insurance, you have pretty much, it's in the saying, okay? Permanent insurance, you have it for the rest of your life. It's long term. So as long as the policy is still active and you're still paying into it, right? You're going to be covered for whatever your death benefit is, alrighty? So along with that, there's obviously different kinds of permanent insurance. There's it definitely varies from whole life, ULs, universal life insurance, to IULs, index universal life insurance. But the one that I mainly sit down and discuss with my clients are IULs. So with an IUL, it comes with a cash savings account. So with that savings account, it starts to accrue interest, right, over time. So with that savings account, it has a cap, so meaning, usually typically anywhere between, it can be 9 to 15% of the cap on there, right? And then anywhere between 0 to 0.75% at a floor. So what that means is, let's say if the market is doing very well, right, and it goes up, let's say 20% that year, you're going to cap out at your 15%. But let's say if the market is doing very poorly and it starts to, let's say, go negative that year, you'll hit your floor of 0.75%, so you won't be losing any money there. Okay, so that's definitely a really good benefit there within the permanent life insurance and the IUL. But along with that, I don't know if you guys know, but life insurance is one of the only things in the United States that's tax-free. So in turns, your cash savings account also grows tax-free because it's under the umbrella of life insurance, if that makes sense. So because it's under the umbrella of life insurance, nobody has access to this money but you, okay? That's right, only you. So, let's say if you're married and you get into a messy divorce, the courts and your wife, they can't touch that, or your husband, they can't touch that money because it's yours under your life insurance policy. Let's say, for example, you go really broke and you owe a lot of money to a whole different bunch of places and you have to file for bankruptcy. They can't touch it there because it's under your life insurance policy. So it's just all the way around the board protected under your life insurance policy. So definitely a pretty good insurance to utilize if you want to start utilizing something for more like supplemental retirement income later on in your life. Definitely having some more things in your financial portfolio along with like your IRAs and maybe if you have some stock options and things of that nature, just kind of diversifying your financial portfolio a little bit. So it's definitely pretty useful to use. I mean, I personally utilize one. I have actually both of these, term and the IUL. So just make sure I'm protected, from now and into the future. So that's pretty much it for today's video. We just wanted to, like I said, educate you guys properly on how life insurance works. If you guys have any questions, leave comments below or, reach out to us on any of our social media websites. And, definitely we'll look forward to seeing you guys next week.
All right. Bye, guys.